What is up, everybody? We are going to be going over another video today. We are going to be going over market structure and break of structure. Again, I'm going to try and make this as simple as possible. And for the people out there who have something to say, like there always is, this is the way I trade. This is what works best for me. And again, I show my live trading every single day, and I'm here to teach the people who want to learn. And that's my job, okay? So today we're going to be starting to go over strategy, right? We're going to go over market structure, break of structure. We'll figure out what video we're going to do next. But it is the weekend. I'm going to try and get some more videos out since I've been slacking on it. It hasn't been my best month in trading. We already know that if you guys watch my YouTube channel. But again, we're going to keep pushing forward and doing what we do. Make these videos to help you guys and girls learn also and keep pushing forward on what we're doing. All right, so again, today's video we'll go over market structure and break of structure. We're going to go over the definition so you guys can write that down in your notebook. And then we're also going to just show you guys and girls the live charts of, excuse me, of just going over what market structure and break of structure is so you guys and girls understand it, and then you can go back and study it on your own. All right, let's jump into it. Okay, so you should be able to see this definition right here. This is what you guys should pause, or you can just listen to me read it out. I'll read it out for you guys and girls. But again, this is the definition that I used to understand what market structure is. Okay, so market structure is the way price moves over time by creating highs and lows. Okay, it tells us whether the market is bullish, so making higher highs and higher lows, or bearish, making lower highs and lower lows, or ranging, which is I go over with I say consolidating, moving sideways. Okay. In the futures trading market structure helps us identify trend direction, know when a trend is breaking, and decide whether we should be looking for buys or sells, so going long or short. Okay, and we're going to go over the definition for break of structure also, but I first want to go over what market structure is. Okay, so write down this definition in your book, and we'll pretty much go from there. We'll go over a couple of examples, and then we'll go over break of structure, and we'll end the video on that. So the market tends to move in three ways only. It moves up, it moves down, and it moves in consolidation, right? So just not going anywhere. It's not going up or down, okay? So there's three different ways. We'll go over consolidation first, because again, that one should be pretty easy to understand, okay? We'll get a little drawing to here. So when we see the market going like this, right? We're moving in consolidation, okay? Me personally, I'm not a scalper. I don't like trading in these areas, okay? If the market is looking like it's consolidating, we know it's consolidating by looking at if is it creating higher highs and higher lows, or is it creating lower lows and lower highs, okay? And we're going to go over what that means in a second when we go over an uptrend and a downtrend. But with consolidation, the market is just ranging. It's moving sideways. It's not going anywhere. It's not going in a specific direction. It just keeps making another high, another low, another high, another low, and it's just ranging in an area. We're not moving in an up direction or a down direction. This is where I do not like to trade. Some people are scalpers. Some people like trading this, okay? I personally don't. The way my strategy works and everything like that, I like trying to predict what the market trend is going to be for the day, for what time I do trade, and then try and get a little piece out of the pie of that little market direction, right? Because if I want to be bullish, I'm going to wait and try and use confirmation to find a bullish entry, and that's where I use the confirmation. Ooh, sorry, I did the doggo. And that's why we use the confluences that I'm going to go over to create our strategy so we can identify if we want to go short or long and help get a little bit of a piece out of the pie in that direction and make our money, okay? So next thing I want to go over, right? This is consolidation. We'll keep this in the corner, and then we're going to go over what an uptrend is, okay? So in an uptrend, what are we doing? The market is going up, correct? If we want to go long, we want to buy, we want the market to go up so we can make money, okay? Excuse me. What does the market do when it's in an uptrend? We are creating higher highs and higher lows, okay? The market trend is going to look like this. So as we can see, for an uptrend, we are creating higher highs and higher lows. I could put a little message here for you guys. So we'll put higher high, HH, and then we'll put higher low, okay? As we can see, we can copy this probably. Copy, paste. This might take a second. Hold on a second. We'll make this so you guys can draw this in your notebook also, so it keeps you to memorize what an uptrend is. This is what you should be drawing in your notebook, okay? And put uptrend underneath it, all right? Above it, next to it, whatever you want. But HH means for higher highs. HL stands for higher lows. When we're moving in an uptrend, we are consistently making a high, then we make a low, and then what else do we make? We make a higher high, and then we make a higher low, right? This high is lower than this high. So what happens? This new high is higher than this high. That's why it's called a higher high. What about when this low is higher than this low, right? Higher than the last low, so it's called a higher low. If we're consistently making higher highs and higher lows, we are in a what? An uptrend, okay? What is it if we are in a downtrend? So if we are in a downtrend, what are we going to make? Lower lows and lower highs, right? Basically the same thing, but opposite. We'll put the drawings here for you guys and girls also. So we have lower high. Okay, when we are in a downtrend, what are we creating? We are creating lower highs and lower lows, right? So when we form this lower high, right? This previous high is higher than this one, but we're in a downtrend. So this low, this high is lower than this low, right? So that's a lower high. What do we create next? We create a new low, right? So this low is lower than the previous low. Pretty simple, right? So this is lower low, lower high, lower low, lower high, lower low, lower high, okay? Pretty simple. The market moves in 3 directions. Consolidation, right? Write this down. Consolidation here. Uptrend, downtrend. Boom. Market structure. I'm trying to make it as simple as possible. It's really that simple. Again, you might not understand it within the first couple of days or weeks or months or something like that. You should understand it within the first couple of weeks probably. But again, we're all different. But again, this is market structure, okay? The market moves in 3 directions. It moves up, it moves down, and it consolidates, okay? Screenshot that. Write this definition down in your notebook. Write down these drawings in your notebook just so you guys and girls have it for memory. And again, we can go over this in the live charts also if you'd like, okay? So let's go to the hourly time frame, okay? So as we can see on the hourly time frame, right? This is how you guys and girls are going to go back and you're going to study. All right. So look, we make a new low. We're not going to go over a break of structure yet, but this is where a break of structure would be. Let's put it for example, when we move into an uptrend, right? So we're previously in a downtrend. You should be able to tell, right? Previously in a downtrend, we'll go to my break of structure tool. We're going to go over that in a second. I promise. This will make more sense to you in a second. We're just going to go over market structure real quick. But we can see we end up making a high and then a low. We make a higher high and then we make a new low. And then look, it looks like we switch direction. We consolidate for a little bit. We never broke structure to the downside. But we form a new high, a new low, and this is where we're continuing the uptrend, right? We have a higher high here. We make a low, form a higher high, form a low, continue in up direction. And a good way you guys and girls can identify if we're in an uptrend or a downtrend, you can literally take the tool right here. I don't know what it's called, the path tool. And you just go like this. Look, click, click, and you just identify the trend. This would be the new high up here. Low, and then we start to switch directions, okay? But look, you can take that tool, you can drag it to the side. We could see when we were here, we started to move in an uptrend, right? We're forming higher highs and higher lows. It looks like we were going to switch the direction here, but we honestly just pulled back into like a fair value gap. And again, we're going to go over that in the future. But again, we continued the uptrend, right? So do the same thing for a downtrend. Let's go to the on the hourly time frame, right? We could see, how do we see here, right? So we form, let's say, a high, and then we form a low. We form a lower high. We form another low. We form a lower high. We form a lower low. We form a lower high. We form a lower low. We form a lower high, and then price decides to dump. Okay? So that's how you pretty much tell if you guys and girls are in an uptrend or a downtrend. Literally just take the drawing that I showed you before and identify if we're forming new highs and new lows. Okay? New highs and new lows. Pretty simple. And again, we can go over how to identify what a high is and what a low is before we go over a break of structure, actually. Because again, some people might not be that experienced yet, and that's okay, right? So to identify what a high is and what a low is, you're going to use 2 candles, okay? And this is the way I use it, all right? So to identify a high, we're going to see we have a bullish candle and a bearish candle. My bullish candles are gray, okay? We have a bullish candle and a bearish candle. The highest wick part out of these 2 is going to be your high, right? So let's say right here, this is an hourly high, okay? We see that. Let's go put this in replay mode. It consists of 2 candles. We form a bullish candle and a bearish candle, right? We mark the highest point out of both of these candles. Bullish candle, bearish candle, highest point out of the 2 wicks, bang, we mark that. That's our 1 hour high. If we go back before this, right, we'll take the select bar, we'll go back to these 2 candles, right? Same example, for us to be bullish, for it to be a high, right? It needs to be a bullish candle, then a bearish candle. Both have to be candle closures. It can't be an open candle. It has to be candle closures. What is our high? We have a bullish candle, and then we have a bearish candle. Where's our high? Boom. There's our hourly high because we're on the hourly time frame. Correct? And we're going to go over how to identify draws and liquidity and stuff in the next video or the video after that. But again, we're just focusing on market structure, highs and lows right now. I said just break a structure also, but we'll go over market structure, highs and lows, and break a structure, okay? Because again, we ended up doing that within the video. All right. Next thing, how do we identify a low? Still consists of 2 candles, but it's the opposite. It has to be a bearish candle closure and then a bullish candle closure first, okay? Or second. Bearish candle first, bullish candle second. Opposite than bullish, okay? So look, we have a bearish candle closure here. We have a bullish candle closure on the hourly time frame. Boom, there's our hourly low. And it's the same thing with every single time frame, okay? This would be an hourly low, right? And we're going to use that as a draw on liquidity in the future. Same thing here. Where do we come to next? What do we see? We see a bearish candle closure and a bullish candle closure, right? Mark out the lowest part out of both of these wicks is going to be our hourly low, okay? And we can see price comes up and sweeps out this hourly low and we get a little bit of a reaction off of it, okay? But look, it works on every single time frame. All right, we'll go to the 15-minute time frame. Same thing. If we want to look for a bullish candle, correct? What do we got? We don't even need to go back here. Look for a bullish candle. Excuse me. We look for a high, okay? How we're identifying a high, right? This is going to be very important for breaker structure. We need a bullish candle first, bearish candle. Is our 15-minute high right here. Highest point out of the two wicks. Let's go forward a little bit. When's our new low form? Bang, right here. Where's our new low form? Bearish candle, then a bullish candle, correct? Lowest point out of the two wicks. Boom. There's our low. What do we wait for? Where's our next high? Our next high was right here. Bullish candle, bearish candle closure. Boom. That's a new high. And this is how you guys and girls are going to go back and study this, okay? What do we wait for next? When does our new low come? Right here, right? We can see price comes up and sweeps out this high. Again, I don't want to get too far on myself. We're gonna never mind. Shut up, Travis. When does our new low form? Right? Bearish candle, bullish candle. Lowest part out of the two wicks. Boom. There's our low. Pretty simple, right? Pretty simple. But now I want to go over breaker structure. Okay, so we went over market structure. We went over what a high and a low is. Remember, market structure, there's three types of market structure. Bullish, which forms higher highs and higher lows. And there's bearish, which forms lower lows and lower highs. Okay? And then we have consolidation, where price is just trading in a range. Cool. Second thing, how do we know the difference between a high and a low? Okay? A high consists of a bullish candle closure and a bearish candle closure. You mark the highest point out of the two wicks. Okay? How do you mark out a low? It's a bearish candle closure, then a bullish candle closure, and then you mark the lowest point out of those two wicks, and that is your low. Pretty simple, pretty cool. We're only at 13 minutes too, and now we're going to go over a breaker structure. Okay? I want to go over the breaker structure real quick, and then we will go from there. All right? I already have it copied out, so we could just make it nice and easy here for you. All right, this is what you're going to write in your notebook. Okay? So, a break of structure, and you'll see when I use it with my tool and everything like that, I have the trend line tool, right? I draw this out. I have it right here. BOS, break of structure. I use that tool right there just for that. So look, we have a break of structure. It happens when price breaks a previous high or low, showing that the current trend may be continuing or changing. In a bullish market, a break of structure is when price breaks a previous high, right? When we're creating those new higher highs, right? In a bearish market, a break of structure is when price breaks a previous low, creating that lower low. Okay? In the futures trading, break of structure helps us confirm direction and avoid trading against the trend. Okay? The trend is always your friend. Remember that. A lot of people say that. You'll hear that a lot in the trading community. But again, the trend is your friend. We're using market structure, we're using highs and lows, and we're using break of structure to identify what trend the market is currently in, so we can use the continuation confluences that we're going to go over in the future, like fair value gaps, equilibrium, order blocks. Maybe we'll go over the Fibonacci. I'm not sure if I'm going to go over that yet. We'll use those continuation confluences to identify how we can get an entry based off of that trend. And again, try and continue taking our trade with that trend. Okay? So write this down in your notebook right here. Screenshot it, whatever you want. I'm about to exit out, so get it done. 3, 2, 1. Goodbye. All right, so break of structure. We went over highs and lows, right? Let's do a little drawing first. Okay, we're going to go an uptrend. All right, so look, we're in an uptrend. Okay? I'm going to take this replay button out of the way. We're in an uptrend. You should be able to see this. What are we looking for a break of structure? We're waiting for the trend to shift. Okay? So if we're in an uptrend and we want to see a break of structure to the downside, we want to see price break structure to the downside and show us that we're going to continue in a downtrend, correct? So what do we need for price to break down to the downside? We need price to break below the most recent low, right? So break below here to identify that we are going to be in a bearish trend after this, so a downtrend, right? The reason why we wait for it to close, it has to be a candle closure below this low to be a break of structure, is because that shows us that we aren't creating higher highs and higher lows anymore, right? Because this new low is going to be lower than this low. And what does a downtrend consist of? Lower highs and lower lows. So the new downtrend should look like this, correct? You should be able to see that. Whoops, hold on. Let's move my face a little bit. I'm so sorry. There we go. Right there. Okay? And then for us to want to continue up and look for price to change in the up direction, what do we look for? We wait for price to break structure above the most recent high, right? It's pretty simple. Pretty simple. So this would be our break of structure for price to continue in a uptrend. Okay? And why would we consider it being an uptrend? Because again, a downtrend consists of lower lows and lower highs that we are creating here, right? We form this high, lower low, lower high, lower low, lower high, lower low. And then we get a candle closure above this most recent lower high. What are we creating? We're creating a higher high. And then we're going to create a higher low, and then another higher high, then a higher low, then a higher high, then a higher low. We're going to continue in an uptrend, right? Boom! Simple. So now let's put it into the charts. Should be pretty simple. You can go back and rewatch that. Again, don't make it overcomplicated. That's my job here, to not make this shit overcomplicated. I am not the smartest guy in the world. Again, I think I'm good at trading personally, but again, I got a lot to grow. We all have a lot to grow in life. You're never going to be a genius and everything. It's just my opinion. But again, I'm just trying to dumb this down as simple as possible, okay? Go back and rewatch that part if you don't understand it, but we're going to go over it in the live market now. So, okay, we know what a high and a low is, right? We know how to identify them. Let's go to the 5-minute time frame. So how do we identify that we are currently in an uptrend after this? Okay, so we can identify. Look, we're in a downtrend here. All right, pretty simple. We broke structure to the downside, but we're in a downtrend here. What do we need to see for price to break structure to the upside? We need to find our most recent high. Okay, where is our most recent high? Our most recent high, we're on the 5-minute time frame. We have a bullish candle and then a bearish candle closure. Remember, it has to be a candle closure. If this candle is still printing, it could still end up closing bullish. It has to be a bullish and then a bearish candle closure for it to be a high. So we have a high right here. What are we going to look for? We're going to wait for a candle closure above this high to show us that we're going to continue in an uptrend. Is that a break of structure yet? Nope. Continue to the next candle. Bang. Get a break of structure. And we're going to go over something to show you guys and girls something that could be a little bit confusing of when we mark out our highs and lows. But again, just for this scenario right here, we end up getting a bullish candle closure above this most recent low. Above this most recent lower high. Okay? Now we're going to continue in an uptrend. What do we need to do to go into a downtrend now? We need price to break below the most recent low. Okay? And let's see if we can get this example here. I'm going to use the break of structure tool, guys, just to explain it now. But again, I'm going to mark it as break of structure, right? Because we need price to close below this. But as you can see, we broke structure to the upside. Now we're in an uptrend technically, okay? How do we identify our new lows? Bearish candle closure, bullish candle closure, okay? So let's see what the next candle is, okay? This is still our most recent low. This is still our most recent low. We're still in an uptrend. Still our most recent low. Still our most recent low. Bang. We create a new low. Listen, we don't care about this most recent low anymore, okay? We're always going to go over the most recent low and the most recent high. When did we create a new low? When we formed another bearish candle closure and then a bullish candle closure, okay? Now we are going to move our break of structure to the bottom part, whichever one's the lowest wick out of these two. This is our most recent low now. So now if price breaks structure, a candle closure underneath this most recent low, we're going to technically be in a downtrend, correct? So we're still monitoring the lows because we are in an uptrend, right? If we are in a downtrend, we'll monitor the highs. If we're in an uptrend, we're monitoring the lows. Okay, so we're waiting. We're waiting. Let's see what happens. When do we create a new low? Nope, we don't create a new low. But what do? We break structure to the downside, correct? We didn't form any new lows in this area, right? It has to be a bearish candle closure and then a bullish candle closure. What is our most recent bearish and bullish candle closure? The one we have marked out. So we keep that marked out. What do we get? We get a candle closure underneath this most recent low. So now what does this show us? This shows us that price has the potential to continue in a downtrend, correct? So what do we do after that if we're trying to look for longs and we see price broke back down to the downside? We're going to monitor the highs. So where is our most recent high? Our most recent high is a bullish candle closure and then a bearish candle closure. So we're going to put our break of structure right at whichever wick is the highest out of the two candles, okay? So if price comes back up and then breaks up above here, then we're going to still continue in an uptrend, okay? But now we are technically in a downtrend and price has the potential to continue lower, okay? Let's go over one more example. Now we're monitoring the highs, correct? Monitoring the highs. We're going to wait for, all right, boom. We create a new high, right? We don't care about this other high. We're going off of the most recent highs, okay? So now we move our break of structure line to the top of whichever wick is highest because of what? We formed a new high, a bullish candle closure and a bearish candle closure, correct? So now we're going to look. Let's see what the next candle is. Do we break? Remember, it has to be a candle closure. This is a wick, right? Price came up to here, and that's why we wait. but it has to be a candle closure above the most recent high or low, okay? So we're still in a downtrend here. Boom. What do we get here? We get a bullish candle closure above the most recent high, right? Our most recent high, the line's going to be, it's a little bit off, but the most recent high is going to be right here at the top of this red candle's wick. Because again, it's higher than the bullish candle, but it consists of a bullish candle and a bearish candle closure, right? And what do we get above it? We end up getting a candle closure above that high. So now we are technically in an uptrend. And what do we do if we want to see price continue to the downside? We're going to monitor our lows now, right? Because we're in an uptrend. Where's our most recent low? We have a bearish candle and then a bullish candle closure. Mark the lowest point out of the two wicks. Boom. Now you know how to identify breaker structure, highs and lows, and market structure. That's simple. That's simple. All you gotta do is go back, rewatch this video. We went over a couple examples. I hope I explained it really well. If I didn't, go let me know down in the comments. But again, guys and girls, don't try and make this overcomplicated, okay? I'm gonna make my face bigger here. But again, I gave you guys and girls the definitions. Make sure you write those down and make sure you go back into FX replay, go back into your trading view just like I was doing, go in replay mode, identify market structure, identify highs and lows, and identify breaker structure. Just like how I went over it for you guys and girls just right there. Keep doing that every single, holy crap, I just ate Chipotle. I am so sorry. Go over that every single night if you can. Study it. And I promise you, you'll understand it. This is going to be something that's going to be very simple to you and come easily to you once you start getting more experience in the markets. But again, that's pretty much it. That's pretty much it. That's all I could say. So again, hopefully you learned a little bit in this video. This is how you go over market structure, highs and lows, and breaker structure. And then I think we'll go over liquidity in the next video. I'm going to try and film that today so we can get more posted next week. Especially because it's been a little bit more of a rough month for me. We're going to go over risk management in the future, and this is the perfect time to go over risk management because I'm currently having a losing month, and psychology, which will also be perfect because I'm also having a losing month. All right? Sounds good. We'll see you guys and girls in the next video. Like, comment, subscribe, and make sure, let me know if you enjoyed this or if it helped you out. All right? Peace out.